In this video, we're going to be buying two new growth funds that also have capital gains appreciation, which a lot of my subscribers have been asking about. How do we get more appreciation beyond the dividend yields that we're receiving from these yield max funds and cornerstone, which tend to go sideways to down? How can we get more upward, left to right movement? How can we get more performance? So we make over 100,000 per year in dividends at this channel, and we buy highly rated 4-star dividend funds. As you can see, my top fund that I own is Cornerstone, but we're not going to be talking about Cornerstone today. We're going to be talking about these two funds that I'm going to save until the end of the video. One of them is 4-star, and the other is not 4-star, but it made more money over the last 10 years. So these two funds, again, we're going to discuss at the end of the video. But today, I wanted to share with you, we're up 0.76 on a down day. See, the market was down 0.61, the NASDAQ is down 0.63, and the Dow's down 0.41. How did we get this performance of being up about $4,000 today, $4,700? Because of Cornerstone. We're up 18% for the year. Dow's down 0.3. The NASDAQ is up 24, and the S&P is up 9. So we're catching up to the NASDAQ. It's hovering around 23, 24%, and we've gained a couple of basis points since our last video. Again, this is due to Cornerstone. But that's not what the video is about. As I've said, it's about these two new growth funds that I'm going to show you. Briefly, I just want to show you Cornerstone, why it's so special and why it's a 4-star fund, why it's up on a down day because of these drip shares, 649 and 76, 69, 66 here. As you can see, 12% gains, 19% gains, 18% gains. So all of these dividends that I get every month are dripped at the NAV, not the market price. $7.94 is the market price. You saw the drip price of six something. That's the NAV. That's why this fund is up on a down day, because not only does it track the S&P and NASDAQ, but its drip advantages and its premiums that it runs to NAV, which is about a 30% premium on average per year, makes this a strong candidate. This fund's always going to show signs of strength on up or down days. And today the market was down and this fund was up. Sometimes the market can be down or up, actually, and this fund can be down. But overall, it's a 4-star fund and it beat the S&P over the last 5 years. So, but that's not why we're making this video. We're making it for these two growth funds. So, if you need help on Cornerstone, email me for e-guides on how to play Cornerstone, okay? All right. So these two new growth funds that we bought, I already bought them after hours, okay? And so I'm just going to show you my order screen. The orders, well, if I do that, I'll give away the video. So first, let's show this fund here, EOS. Now, you've known about EOS before, but I don't have it on my account right now. I'm going to add it back. It's a 4-star fund. Look at what it made over 10 years. It made $50,000 over the last 10 years. So I'm going to add to EOS because it's still cheap on its chart. And I'm looking for more tech exposure, more growth exposure without reaching, without chasing the breakouts. NVIDIA, Apple, all these funds, these highly weighted funds in the S&P and NASDAQ, a lot of them have had big runs. And so I'm not trying to chase a run like that. I want to buy a tech fund that's cheap. So EOS has a 9% dividend. Look at it on its chart. It was at 19. It even says it was at 25, and now it's at 17. So you have a pretty good upside potential there. As you can see, it moves upward, left, or right on its chart. So this is how I'm going to get that performance that we've been missing because the NASDAQ is outperforming the S&P. We're trying to catch up to the NASDAQ. How can we buy cheaper growth names? It's going to be through EOS. That's our first fund. So I bought 2,000 of that, and it's 30% maintenance. So it didn't tie up any of our equity. It tied up only 30% of our equity. So on $1,000, that ties up $300. So it only tied up $600. If you need help with margin and how I use maintenance and get more income out of all of my plays and squeeze out more income through low maintenance names, just email me for those e-guides. I have e-guides on margin, e-guides on Cornerstone, and a couple of other e-guides, one on fundamental analysis and one on technical analysis. Those are more for the beginners. The margin e-guide, which is more like an e-course, is for the more advanced investor, and Cornerstone is also for the more advanced investor. So we have $258,000 in debt. After we make those purchases, we'll be at $262,000 because I bought 2,000 of EOS, which you just saw, and now I'm going to show you the 2,000 of what I'm buying next. It is, without further ado, Liberty All-Star Funds. It doesn't have a rating, but USA had a 3-star rating once, and that's its sister fund. As you can see, ASG made 60,000 over the last 10 years. So it's beating EOS. It's beating the S&P, in fact. So if you see my past videos on the S&P and Cornerstone, you'll see that the S&P made around the 40s. Cornerstone made around 50. ASG, as you just saw, made 60,000 over 10 years. So I bought 2,000 ASG, and that's also 30% maintenance. It's a quarterly dividend pair, so that's why I don't have it in my account already. I like monthly dividend pairs because it acts as a paycheck. I like to live financially free. I don't like quarterly payments if I can avoid it. So I'm still buying ASG though, because if you look at it on its chart, it's really cheap, and I'm looking for that tech performance, like I told you, but without reaching. And as you can see, ASG, it hasn't had that move yet. Just like EOS, it hasn't moved yet. So on a 5-year chart, you can see that it's really cheap. It was at 10, now it's at 5. So there's almost a double potential there, plus an 8% dividend. So that's how I'm going to get the performance. I'm buying 2,000 of EOS, 2,000 of ASG. Tomorrow you'll see that reflected in the account when the market opens. And those both have about 8 to 10% dividends. So that's going to increase our income by about $400 per year. So this estimated income number is going to grow about $400 tomorrow. And, it's not much, but again, we're doing this more for the capital gains side of things. The yield max funds and the cornerstone funds, that's where we get most of our dividends. But to get that upward left to right movement, we have to still get capital gains appreciation vehicles. And EOS, as you saw by that chart, moves upward left to right, and so does ASG. They just haven't caught up to the other tech sector names, so I'm buying them now. So I think that'll do it for the video. We're just trying to add performance every day. We're trying to increase our income as well every day, while not breaking the bank, while not affecting our available withdrawal number much. As you know, this 372 is my account, but this 116 is what you need to stay alive and live financially free. If this gets to 0, you're in a margin call. So I always keep a nice cushion there of at least $100,000, so that I can allow fluctuations in the market. Even a 10 or 20% drop in the market, I would still be fine, and I'm still able to live financially free. These dividends, they qualify for loans. I just bought a new car, and it was all off of my qualifying income, purely off of dividends. I don't have a job. You can either get qualifying income through a job or through dividends. You can't do it through day trading stocks. That's my problem with other channels on YouTube and day trading, or channels that just talk about the direction of the market and try to guess where everything is going. No one has a crystal ball, so why try to guess? And then you can't qualify to banks from trading, so why even try to trade? Even if you make a lot of money, the banks won't take it. You're gonna have to buy cash for your house you're gonna have to pay cash instead of finance it. And trading, 90% of traders lose anyway. So I don't know why trading is the big lure for most people in this world. They like to trade, they like to get the gains and the Teslas of the world. But I'm playing Tesla, as you know. See our past video on Tesla and how we're playing that. 7% we're up, which is not bad. You're getting some capital gains appreciation plus a 30% dividend. So these qualify to banks, even if the stocks fall and the dividends cash flow the investment over time. So you don't get that total performance, but you still get your payback in full. Tesla being, 30%, for this example, 30% dividends. So in 3 years, that's 90%. So you're almost paid back in about 3 to 4 years. In Tesla, your payback period is very short compared to real estate. So it doesn't matter what the stock does. Doesn't matter if you lose in the stock. The dividends pay back all losses. And then the banks, that is used for qualifying income for loans. So even if you're losing on paper for 1 year, you're going to get paid back in the end of 3 to 4 years. And the banks love it. They give you loans off this, which can help you grow your account more. I'm not saying quit your job. I'm saying use your job for qualifying income and use dividends for even more qualifying income. This way you can quit your job if you have to, or you can just get more loans to get ahead easier in life. And then I'm not advocating margin. I'm just saying if you want to get more dividends on top of your dividends, and perhaps you want to give yourself some breathing room on your bills, because 70% of people are living a paycheck to paycheck, then again, you need dividends for that, or some type of investing on the side of your job, like real estate, but dividends have less moving parts than real estate, in my opinion. And then margin just helps you get there a little faster. I live out of margin. I'm on vacation right now. Well, it's not really a vacation. I'm doing research on the commercial real estate in New York. So stay tuned for that video. And I'm able to investigate SLG and travel all through my debt here. So I don't believe in having cash. Why? Because you lose to inflation by having cash. Some people say cash is trash. So I stay in debt, and the interest that I'm charged on my debt is only 5% versus credit cards of 20%. Even mortgage loans are more than that now. So I live off this low interest and travel and do whatever I want out of my account through this interest. As long as this number doesn't get to zero, then I'm fine. And today this 47 we made, added to my available withdrawal for 47. So every time the market goes up or I get dividend payments in the mail, it just adds to my equity number here, which allows me to safely use my debt. Yes, I add more debt at a lower interest rate, so I don't care, but it allows me to do it safely while my equity stays high. So no matter how high this debt number gets, it's more about this equity number. As long as this equity number can stay high, it does not matter what your debt is. It just matters what your interest rate on that debt is. And so if your interest rate is small, then what's the risk of holding that much debt and never paying it? So anyway, that's my philosophy on margin. I like to live financially free, as you know, on this channel. That's what it's all about, using dividends to live financially free, to qualify to banks for loans. Margin just helps you get there a little faster. So if you need help, again, on my e-guides, email me at akintar48@gmail.com. Other than that, that's what I'm doing. I'm buying these two growth funds, EOS and ASG, to catch up in performance to the NASDAQ without chasing after things that have already had big moves, while buying low maintenance names to keep my equity number high, which then allows me to have cushion for margin calls. So that's what we're doing, and it gives us a little extra income in the process, as well as capital gains appreciation, the best of both worlds. So I hope you enjoyed the video. Leave comments in the section below if you have any questions on how I'm playing EOS and ASG, or if you have other ideas on how to catch up to tech without reaching and buying things that have already had a big run, preferably low maintenance, if you have any ideas on those. So thanks for listening, guys, and I'll talk to you soon.